नमस्कार चेयरमैन साहब।
नमस्कार शर्मा जी, हाउ आर यू?
गुड सर, गुड।
नमस्कार।
नमस्कार जॉली जी।
और शर्मा जी, how what's happening? I heard the leadership is busy today.
Yes, leadership is busy in so many activities, sir. And president is in the chamber, but still busy.
I know. I had a word with both the president and the senior VP, so both of them were saying that they were preoccupied in us together only. So it doesn't matter. Chalo, any which ways. I told them that we'll have you for the next meeting whenever we have that. So I think we will have Pallavi ji and I'll just probably एक बार उनको बोल दीजिए अपने सेक्रेटेरिएट को एक बार वो फोन कर देंगे उनको ज्वाइन करने के लिए।
सर नमस्कार सर।
हाँ नमस्कार।
कर रहे हैं, नमस्कार सर।
पल्लवी मैम को बोल दीजिए एक बार ज्वाइन
हाँ
करने
सर, बात हो रही थी अभी, कर रही है अभी।
हाँ, और स्पीकर्स को भी एक बार बोल दीजिए प्लीज।
हाँ बोल दिया सर मैंने, अभी कर रहे हैं थोड़ी देर में।
Okay, so we'll start at 3 sharp or 4 sharp, probably 1 or 2 minutes here and there. So how many paid delegates are you having till now?
Yes, sir.
How many paid delegates are we having right now?
100 plus sir.
Okay. 100 plus was morning, so अभी भी उतना ही है मोटा मोटी है।
हाँ सर 10-15 आए हैं। हाँ मैम।
I think Mr. Nitin Jain, I think, has also joined. I think.
Badwa sir also joined. And
hello, Mr. Nitin. How are you?
Good.
I'm Mukul Bagla. I chair the Direct Tax Committee here. Hello, Rohit ji. How are you?
Nice to meet you.
So, Nitin ji, 194 hour has been challenging for you as a in your company per se.
Yeah, definitely. Condition is quite challenging.
The audio is a little less, Mr. Nitin.
Is it audible now?
Yeah, perfectly audible.
Yeah. So I was saying, definitely it is challenging for us, similar to other consumer electronic industry. We are facing a lot of issue in implementation of this.
Okay. All right.
Yeah.
And what's the main vertical that you're involved in Panasonic? Like, which is because Panasonic, like the Income Tax Act, is a very, I think, evolving company with a lot of changes happening in the electronic industry.
Right. So we are dealing in consumer appliances, consumer electronics, like home appliances and the consumer electronics. Both the product categories are there, and we are the manufacturing most of these products in India.
All right. Wonderful. Hello, Pallavi ji. How are you?
Good afternoon, sir. Very good. How are you?
All is very good. Thank you.
Good afternoon.
Hi, how are you?
Very good.
Aji, how are you, dear? How is everybody?
Namaskar, sir. How are you?
नमस्कार कैसे हैं आप?
How are you, sir?
I'm very good. Thank you.
Good afternoon, everyone.
Good afternoon to you.
Good afternoon, ji. Welcome, Ajay ji. It's been really long that you have come at one of the webinars or the seminars organized by the chamber. So it's so nice to see you.
तुम बुलाते ही नहीं हो, ये मेरा कसूर नहीं है।
We will keep it.
We
will consider that you're too busy to come, so that's why we don't.
नहीं busy कुछ नहीं होता यार, busy बिल्कुल नहीं है। ये सब कुछ नहीं है, ये सारी projections हैं और सारे there is nothing of the kind. थोड़ा सा I thought एक बारी can we just briefly discuss, क्योंकि तुमने मेरे ऊपर तो वो डाल दिया ना, जो keynote address वाला.
Right.
So and then you have very nicely listed all the issues which we need to discuss. So पहले issues में बताओ, issues में how would you like to go about? So Mukul, you will be the one who will be raising the issues.
No, Pallavi will be doing that.
Pallavi
will be doing that, and she'll be So basically, how we have structured is that Pallavi, would you like to explain that?
Sure, sir. So Ajay sir, so first we'll do your keynote. After that, Mukulji will. First Mukulji will set up the theme address, and then we'll do your keynote, sir. After that, I'll give it to Harpreet from AZB and then Rohit ji from where?
So in the keynote, is it all right if I just explain the provision the way I
Of
understand?
course.
I know.
Sir,
I think better. Okay.
sir, anything you say in the keynote will be most welcome.
And the usual anti-establishment stand will also do with PhD? Or
Yes, sir.
Yeah, absolutely. Whatever you say is going to go straight to the CBD chairman. We're not going to hold our horses back. So whatever you say goes straight there.
You need to go with your recommendation that fix him, huh?
Yeah. So I know how your deliberation is going to be like. So I have a fairly good idea. So I'm really looking forward to that.
Okay, so Pallavi, please go on. Yes.
Sir, then Harpreet will talk about 28.4 versus 194R. And then Rohit ji will discuss the constitutional validity, the circular, whether it's ultra-vires, the act, etc. Is it enlarging the scope? And then we have Nitin, who is the head of tax from Panasonic India. You know, the consumer goods industry is facing a lot of issues in implementation because actually they are the ones who do the maximum sales promotion, you know, B2B and B2C. So Nitin will talk about what are the issues that he's facing in implementation of various sales promotion schemes. And then we'll, after him, then I'll do sort of a panel discussion in which I have some questions, which I'll, to ask some of you or at least most of you, and you are most welcome to jump in wherever you like, sir. Just to keep it a little interactive, and then Mukulji will take some questions from the audience.
Fair enough. I think perfect. Looks perfect. Okay.
So probably we can just wait for 2-3 minutes because we have about 70 participants, but we have confirmation of about 125 plus. So I think probably let's just wait for 2-3 minutes and then we can start irrespective of the number of participants.
Certainly, most certainly.
So what's new at ITT? We heard that it's becoming virtual from the physical form because of the rising number of COVID cases.
They are keeping it as hybrid. So hybrid would mean whoever wants to be there can be there. And hi Sachit, how are you? So wo kar rahe hain log, and I think it's only fair. And secondly, we were also facing another problem. The courtrooms are very small, and President Saab is pushing for disposals. So often you would have 2 benches being conducted by one set of members, and you'll have 50-60 people just crowding on top of each other. So I mentioned to him, I said, sir, ये तो पुराने income tax वाले दिन याद आ गए जब ITO के सामने बाहर खड़े होते थे तो पूरे झुंड के झुंड में. We don't want that to be back. So I think in his own wisdom, and I also feel somehow, I mean, it's a separate debate, that hybrid में अच्छा था यार. The virtual was a good thing actually if you come to look at it. When you make a comparison, having gone back, the leisure of your of the facilities that you have, of all the books along with you. High Court is different, but यहाँ पर because इतना factual है, so I thought even the articulation was better, sitting home. But anyway, मेरा इसमें ये role नहीं था. I think they went by the High Court. The High Court is also,
especially for the lawyers who could handle 10 appeals a day sitting in the chambers rather than when they were having physical. Naturally, that limitation was very much.
वो भी है. But I think it's still easier, yeah. It is easier.
Definitely.
सारा आपके पास सब कुछ है, paraphernalia है. Books की reference है. One doesn't have to rush to the bar to get some books. So it's more comfortable, more informal, I thought. Anyway, let's see.
How is Sachit? All good? Is he there?
All good, sir. All good. Thank you. How are you?
Chair, shall we start the program, Chairman Sahab, Shri Mukul Bagla ji?
Yeah, please do that, sir. Please. Thank you. Thank you, Sharma ji.
Thank you very much, sir. A very good evening to all. On behalf of PSD Chamber of Commerce and Industry, we welcome you all for today's webinar on issues faced in application of 194R being organized by Direct Access Committee of PSD Chamber of Commerce and Industry. Section 194R has been introduced with effect from 1st July 2022 for deduction of tax on benefits, prerogatives. With the introduction of this section, a series of questions have been raised on its applicability, not only in its implementation and interpretations. There are various issues which are faced by trade and industry. So considering all these developments, we have organized today's program so that a proper representation is made to the Government of India for their consideration and implementation for the benefit of trade and industry. Here I would like to mention that PSD Chamber is a 150,000 members based industry body which is representing the issues of stakeholders to various ministries and departments of Government of India and the state governments. So we provide inputs to the government and disseminate the government information with our analytics to the members, esteemed members of the PSD Chamber. And we have a great leadership at the Direct Access Committee of PSD Chamber. Shri Mukul Baglaj is our chair, and he is from senior partner at OP Bagla and Company LLP. He is vested with experience of more than 20 years, and he has expertise in taxation and international taxation. Under his guidance, we represent so many issues of trade and industry to the Government of India, Department of Revenue, and recently we met Chairman CBDT to discuss so many issues of the trade and industry and the possible solutions for the simplified taxation system in the direct tax segment. And we have our co-chair, Ms. Pallavi Dinodia Gupta. She is the co-chair of Direct Access Committee of PSD Chamber of Commerce and Industry. She is an established expert in taxation. In addition to her chartered accountancy expertise, she is trained as a businesses, Europe, Asia, India over the past 2 decades. Her extensive domain knowledge and solution-based approach have enabled her to successfully deliver results. And we have our co-chair, Shri Sachit Joliji. He is the co-chair of the Direct Access Committee of PSD Chamber of Commerce and Industry. He is partner in the taxation group of DMD Advocates. He has over 11 years of experience in advising and representing various Indian and foreign clients from the aviation, media, finance, education, FMCG, IT, oil and gas, and pharmaceuticals sectors before AAR, Income Tax Tribunal, High Courts, and the Honorable Supreme Court of India. So we are hopeful that today's deliberations will be very, very fruitful, not only for the members of PSD Chamber of Commerce and Industry, but all the stakeholders which are associated with the direct taxes segment. So we look forward a great government kitty in the taxation segment and a great growth of the Indian economy to become a $5 trillion economy in the next very few years. So with this deal, we are very, very promising about the Indian economy, and we look forward that we will grow in a much faster trajectory with the more and more simplified tax regime. With these words, I would like to invite our chairman, Shri Mukul Baglaji, to give the welcome remarks and the theme presentation on the subject. Shri Mukul Baglaji, please.
Thank you, Dr. Sharma. My dear friends, I welcome you all to this webinar on issues faced by the industry on the recently introduced Section 194R of the Income Tax Act regarding TDS on benefits and perquisites. I welcome Mr. Ajay Wadhwa, President, ITT Bar Association, my senior in the profession and also in the cricket field, and also a very good friend. Ajay has also been the chairman of the NIRC of the Chartered Accountants and is one of the stalwarts in the Delhi income tax fraternity. I also welcome Mr. Nitin Jain, Head of Tax at Panasonic India, to the webinar. He'll be highlighting the various challenges faced by the industry with the introduction of Section 194R. And to bring solutions on the table, we have distinguished speakers, Mr. Rohit Jain from West Associates, Mr. Harpreet Ajmani from AZB and Partners, and my co-chair, Ms. Pallavi Dinodia Gupta from SR Dinodia and Company, and Mr. Sachit Jolly from DMD Advisors. I also welcome all the participants who are attending this webinar in great numbers. To set the theme, the Honorable Finance Minister in the budget speech for 2022 introduced this section, and she mentioned in the budget speech that as a business promotion strategy, there's a tendency on businessmen to pass on benefits to their agents, and such benefits are taxable in the hands of the agents. And in order to track such benefits, so the emphasis was on tracking. In order to track such benefits, she proposed to introduce section 194R and provide for TDS on the same. So the basic intention of the government was to track such transactions and the genuine irregularities which were happening because companies were giving a lot of incentives in the form of motor cars, gold coins, free trips abroad and in India for dealers and their families. So definitely a lot of benefits were being passed on to the agent, and the agent was not reflecting these receipts in its books of accounts. So as a result, on one hand, the businessman was claiming a deduction for this expense, whereas the agent was not showing the receipt of these incentives in its income tax return. So therefore, in my opinion, the basic intention of section 194R to track these transactions was correct. However, it is the expansion of the scope of 194R which is creating most of the havoc here. After the introduction of 194R of the Act, the PG Chamber files its representation before the CBDT on 26 May 2022 to issue a circular and clarifying therein that what transactions are covered by 194R and what transactions were not covered. The chamber had requested that genuine business expenses like discount and rebates and also expenses on dealers meet for non-pleasure purposes should not be construed as benefits on which TDS is required under section 194R. Well, when the circular came on 16th June, it was like as if the representation of the chamber was being addressed, and many of the answers provided in the circular were in respect of concerns raised by the chamber, and at a few places in the same chronology also. Like it was seeming as if the questions are being asked by the chamber and the answers are being provided by the CBT. So it was very heartwarming to see that. But unfortunately, the circular also covered a lot of other transactions and other aspects which were never thought to be a part of 194R. So a small section has created a lot of havoc in the minds of the businessmen and the tax practitioners. The circular, which we all refer to as circular number 12 of 2022, dated 16th June 2022, which says guidelines for removal of difficulties under subsection 2 of section 194R of the Income Tax Act. A circular was meant to clarify things and to remove difficulties. However, the circular has introduced so many new aspects to section 194R, which were never envisaged before. So instead of removing difficulties, I would say a lot more difficulties have been created. So today's webinar is more about understanding and dissecting the CBT circular and the provision of section 194R of the Income Tax Act. We'll be spending a lot of time understanding the legal as well as the practical issues arising out of the circular. It is a common knowledge that any withholding provision, when introduced, increases the compliance burden for the taxpayers and the industry. The circular, as we all know, is in the form of FAQs and talks about several regular business transactions, whether it is cash discount, sale discount, incentives, free samples, and the list goes on. This is one part of the issue that have been dealt with, but it not only speaks about these transactions with customers and distributors, but also with vendors like professionals and consultants, which we as professionals feel that was not required. The circular, there's much greater widening of the scope of the section from the manner in which the things were first introduced, and now its actual application. I think it is needless to say that when we have circulars like these, there'll potentially be a lot of litigation, and there'll be significant areas of dispute between the manner in which the tax administration will look at things and how the taxpayers will look at them. And this is in terms of looking at the scope beyond section 28.4 and so on and so forth. In addition to the various provisions mentioned in the circular, one interesting benefit has been mentioned in question number 8, which says that expense attributable to leisure trip or leisure component even if it is incidental to the dealer business conference, would be considered to be a benefit taxable under section 194R. So therefore, the leisure component could have a very, very wide import, and even serving of alcohol or music entertainment program given during the course of the business conference may be constituted as a leisure or a leisure component and treated as benefit under section 194R. Also extremely debatable is the applicability of section 194R in respect of waiver of loan by bank or other financial institutions to its borrowers, which will be debated in detail in the subsequent sessions. I've recently come to know that while depositing TDS, the option of choosing 194R is not available in the challan provided by the department, which needs to be updated. So what needs to be done till the challan is updated will also be discussed in the subsequent sessions. Today's webinar is in the form of is in a question answer format, wherein we'll be addressing specific issues which we have shortlisted and would include the following, which are meaning of benefit or perquisite, explanation of out-of-pocket expenses, customer meet expenditure and expenditure on customer entertainment, TDS on sample products given in the dealer customer conference, benefits arising out of waiver of loans, capital assets, and perquisites benefits to non-executive directors and seconded employees. And also TDS in case of diminishing benefits over different years like car and house, etc. Anyone with any specific question other than which we have already mentioned may ask the same in the chat box and will be suitably addressed. We had the pleasure of meeting the CBD chairman last week on Thursday, and we had informed him about today's webinar, and he has requested us to submit a very detailed note to him specifically about what challenges the industry is facing in respect of 194R. So I would request everyone to raise their pertinent questions, and we'll address them as much as we can, and then otherwise we'll compile a paper and send them to CBDT for further clarification. With these words, I would like to hand it over to Ms. Pallavi Dinodia, who is the coordinator of today's webinar, for taking the program forward. Thank you so much.
Thank you, Mukulji, for that very good address in terms of putting the context out there. I would like to invite Shri Ajay Wadhwa sir for his keynote address. Ajay Wadhwa sir needs no introduction, but I'll still just say that he's the current president of the IKIT Bar Association. He has more than 34 years of experience in handling complex litigations. So we welcome you, sir. We look forward to hearing from you both, the compliance part and also the litigation part, and a no holds barred keynote. Welcome, sir. We welcome you to the BHDCCI.
Thank you very much, Pallavi. Thank you. And thank you, Mukul. Thank you, Dr. Sharma. Thank you, Rohit. Thank you, Sachet. And welcome to Harpreet. Thank you for giving me the honor of delivering this keynote address. The honor is onerous, as you know, because I'm not usually used to giving keynote addresses. I always butt in and generally try to chip in. But well, today it's a special honor and I'll try and do some justice to it. So, well, friends, 194R, a very small 5-line substantive provision, very innocuous. And I don't think it takes rocket science to predict that, like 14A, if you remember 14A, again, a very innocuous, brief little provision, and has made people like Sachet Dolly multi-millionaires and so many others, with hundreds and thousands of cases mushrooming all across the spectrum, litigation galore. And, at the end of the day, you feel, well, is it worth it? Is this an economy which is 144 out of 180 nations in the world? Do we have the luxury of such litigation? Why can't things be very simple put across. After all, we have so many experts. Now today, I'll tell you, Pallavi, by the end of the day, the way you framed the queries and the way all of you have done your work, we'll safely be able to predict at least 50 to 60 points of litigation, which are, out of which at least 10, 20 are going to the Supreme Court for decision. And at the end of the day, the whole thing is going to come to a knot. I mean, it could be cynical, but well, that's what I've seen for the last 34 years unveiling and opening up in front of me. Now, I'll start with the very first issue. Of course, Rohit, I'm not going to traverse into your zone, but I need to at least put the record straight as I understand. That what is TDS? What is the concept of TDS? TDS is an alternate mode of recovery of tax. Now, you're normally supposed to pay tax for your income. Here, you shift the burden on the deductor such that he, as your agent, collects tax on behalf of the recipient. That's the concept. And that concept necessarily envisages income, because income tax is all about income. I'll come back to the charging section before I move any further. Now, the charging section in every enactment is something which is etched in stone and is the very basis of the entire taxation system. Now, you have the charging section and section 4 of the Income Tax Act. Now, what does section 4 say? Section 4 says, briefly, income tax shall be charged on taxable income. Now, this says it all. A, that income tax, based on the Constitution, is to be levied, and it's to be levied on income tax, on total income. That's it. And everything from here on moves on, heads of income, 11, 12, all those sections. So, but what's the funda? The funda is income. There has to be income. Let's go a step further. Let's go into section 4, clause 2. It says, in respect of income chargeable under 4.1, right? Income tax shall be TDS as well. So, again, TDS is to be deducted on income. If there's no income, there is no TDS. That's the charging section I'm talking about. All right. Now you say, ठीक है, charging charge को कहता है. Then there's a separate chapter which talks of section 1. It starts with section 190. Let's go into TDS. Now look at section 190. Now what does 190 says? Tax on such income shall be paid by way of TDS. Which income? Income which is assessed as income. Now section 190 also says that tax is to be on income. What does the circular say? Now circular says no. Question 1 of the circular says no, it doesn't make a difference. Income or no income. Why? Because 194E, there a decision in that case in Pilscom said it doesn't say that. That decision is completely divorced from what they're construing it to be. Now you start with an illegality which is incurable. Rohit is going to dwell on it, but this is the very basics of income tax. I don't understand how the mind works in such cases. You could have done without it also. How does it make a difference? How many cases are those where income is not going to be taxable? Of course, there is one which you just suggested, Mukul, and Mukul just stated that loans which are in the nature of capital, if they are written back, they are not taxable. When you want to tax those, you have that one case in mind, and you now say, all right, we will change the entire gamut of TDS. That's not the way. That's not done. So that's one, starting with an illegality. Now, we all know what is the role of the CBDT. Their role is to come out with rules and notifications. And notifications cannot be a case of an overreach. They have to be within the law which has been passed by the Parliament. And you can only explain that law or give benefits vis-a-vis the enactment, but you cannot curtail benefits. Now, every question, every answer is either expansion of the section to the detriment of the assessee? Or curtailment of benefits, curtailment of what the usual law is? No, benefit and perquisite is meant even to mean giving cash. Who ever heard of this? Of course, you have to come to this. But now, having said this, the blood boils, so it becomes even more interesting. So now I'll come on to section 194R and I will read clause 1. Now, clause 1 has 5 components. And as I understand, I'll try to put it across to you. So they start with any person responsible for providing to a resident. Stop. This is part 1. Perfect. Person responsible for providing to a resident. So it applies to residents and not to non-residents, because non-residents is 195. So that's clause. That's part 1. Any benefit or perquisite, whether convertible into money or not. Stop there. That's the second. I'll read the whole thing, then I'll tell you. So that's the second part, which needs interpretation and needs explanation, needs understanding. Arising from business or the exercise of profession by such resident. Another one. Shall, before providing such benefit or perquisite as the case may be, to such resident, stop here again, ensure that tax has been deducted in respect of such benefit or perquisite at the rate of 10% of the value of or aggregate of value of such benefit or perquisite. So there are 5 limbs to it according to. Now, what does it say off the cuff? That when you provide a benefit or a perquisite, whether it is convertible into money or not, as long as it arises from the business or exercise of a profession by such resident, before providing such benefit, to such resident, ensure that the tax has been deducted. So you have to ensure that the tax has been deducted. You need not deduct tax at source. So let's now go into each one very quickly. I have another 10 minutes, right? So what is any benefit or perquisite, whether convertible into money or not? Famous judgment, which we're going to be discussing, Mahindra and Mahindra. They say, what happened in that case? In that case, there was a loan given to a business entity for purchase of a fixed asset. And the loan was written back as income. So they say it comes under section 28(4). So what does Mahindra and Mahindra say? Mahindra and Mahindra is not this solitary judgment. There are many judgments to that extent, explaining what benefit or perquisite means. So they said, benefit or perquisite is non-monetary in nature. A. It's a benefit. And benefit in kind. Non-monetary is in kind. And they further go on to explain that a loan, write back of a loan, will increase your coffers of cash, of asset. Therefore, it's not a benefit. It tantamounts to you being given cash. So it's not a benefit. And therefore, it goes outside the ken of section 28(4). समझ आ गई बात? चलिए. Then, now if you read the proviso to section 194(R)(1), the first proviso, they say, provided that in a case where the benefit or perquisite, as the case may be, is wholly in kind or partly in cash and partly in kind, but such part in cash is not sufficient to meet the liability for deduction, ... So let's stop here for a second. So they say, if the benefit or perquisite is partly in cash and partly in kind, then what happens? The operative part of the proviso is, how will you deduct tax at source in such a case? If the cash is not sufficient to meet the deduction, the amount of deduction. But the CBDT now says, steps in to say, that the intent of the legislature is very clear. It also includes cash. So therefore, benefit or perquisite also means a benefit given by way of cash. It's a proviso. Understand what's a proviso? What's a proviso? What is the meaning of a proviso? What does a proviso do? Proviso lays down a stipulation or a condition or carves out an exception. It's distinct from an explanation. By way of an explanation, you can bring out a deeming fiction. You can deem a non-income to be an income, but not by way of a proviso. It's not an exception. You are adding word to benefit and perquisite by including cash. So at the very outset, the proviso is wrong if it is to be construed in this manner. It's not an exception. It's not carving a stipulation or a condition. So illegality at step number 1. And then you go on further to expand. अब आप सब देखिए. And so now, okay, let's look at another dichotomy, another problem that's going to arise because of this. Now I give Pallavi ko, I have to give her a fee. So as a benefit, I say, all right, very nice, Pallavi. So here is a pen of 20,000 rupees for you, and another 10,000 rupees in cash. Up, cash is also professional fee. Pen I can understand is a benefit, but cash is professional fee on which you are going to deduct tax TDS in any case. But here, so what you can now say is, all right, cash और आपको दे दिया, आप 10% काट लीजिएगा, मेरी obligation नहीं. Because here, if I come under 195R, then the person who's the recipient will deduct tax at source of 10%. I mean, will deduct tax and show it to me. My obligation is not to deduct tax at source, right? So अब वो दिखा देगा आपको कि मैंने ये पे कर दिया और ना दिखाया. So अच्छा, now see the problem. On one hand, cash is a professional fee on which the deductor has to deduct tax at source. I don't deduct tax at source. I leave it for the other person to deduct. TDS officer कहेगा नहीं, ये 194R में नहीं, ये तो professional fee में आना चाहिए था. You should have deducted tax at source. Look at the contradiction which is inbuilt here only. I mean, those are the fallouts of treating cash as benefit and perquisite. One can go on, there are many more. I'll move on to the next now. So this is one, the second limb which I've just explained to you. Then, arising from the exercise of business or profession by such resident. Therefore, what it means is that the person who is the recipient of the benefit must be exercising business or profession. Right? And the word is arising from exercise of business or profession by such resident. Now I'll try to explain to you what does the word arising mean. Now arising, I'm not saying it myself, there are numerous high court decisions. They say there are two concepts. One is arisen, and there is another concept called accrual. Accrual is notional. Arisen is factual. Quickly, I'll give an example. Let's say I have shares worth 400 rupees, and I give it to Pallavi for 90 with a condition that after 3 years, you can only sell them. Now here, what does happen? What does the AO do? AO will tax you on the difference because they say cost aapki hai, difference aapko de diya. But you are forgetting the word arisen. Arisen is factual. Arisen means that only when she sells it and makes it a part of her income will tax have to be deducted. The income is accrued, but it's not arisen. The section also uses the word arisen. You get my point? So, another issue. All right, one more example I'll give you. Let's say there's an artist. An artist is engaged by the principal to deliver a show. And there you have 500 participants. Besides the fee, the participants are extremely happy and they decide that we should give 2 lakh rupees to the artist for having done such a great job. They collect money and they give it. Now, is that income? The answer is no. It's a voluntary payment, not having the character of income because there's no continuity to it. There is no expectation. There is no agreement there. It has accrued to a person. It is entirely my own volition. How do you again marry this? When you say my cost minus what? Minus the difference. Then another thing is, now here only in this very light, samples. Now I give a sample, or I give medicine to a doctor. Now I'm a pharmaceutical company, and I give medicine to 500 doctors with whom I don't have any relationship as such of business. Am I covered? They'll say yes, but no, you're not covered, because arising from the exercise of business or profession by such brethren means vis-a-vis you. So I must have a business relationship with Pallavi if, besides the fee that I give her, the benefit is also to be taxed. If she's a stranger to me, even though she's carrying out business, if I give her anything, it is not taxable. It should be taxed under section 56. Now clarify that. This taxation is not based on taxing the ultimate consumer. Okay, so you see the concept, the issues that will arise on account of the phrase arising from exercise of business or profession by some person. So many. Now let's go on to the next. Shall, before providing the benefit of purchase it. Now this is the worst that one could have envisaged. It's a dampener to industry. Now I give Pallavi my car. I say, all right, go enjoy the car for 5 days. Now, firstly, how do I know how many kilometers he's going to spend? And how do I value that service? And how do I know she might use it for another 4 days thereafter? Mera kharcha to chal raha hai. I'm paying for the expense, for the petrol, for everything. So I keep paying TDS, thak rupaya. Come on, yaar. Huh? Okay. Then my view is that, this will be a dampener, as I said, to the industry. Dampener in terms of expenditure. What do you want today? You want growth. And how does growth happen? Also through expenditure. If I start to curtail my expenditure, मेरा 10% बढ़ जाएगा. 10% इसलिए बढ़ जाएगा कि जिसको मैं कोई recreation दे रहा हूं, he will not pay 10%. And if I'm sure that I have to retain that customer, I'll have to pay 10%. So my expense is gone. Why? Liquidity chali gayi. Why? Why get into such things where these sort of hardships are going to arise? Then it says, ensure that tax has been deducted in respect of such benefit or purposes. So it's my liability to ensure. And that's the catch. Now, if I have to ensure, that means if there is any deviation, any default, I'm responsible. And TDS, you all know how serious the provisions are. You don't even have to establish mens rea there. It's a default, penalty, and prosecution follows. You go for compounding, but how many times? And let's look at Tata's. They've got hundreds and thousands of customers. Now they are giving samples to hundreds and thousands. Now, how do they ensure that everybody pays 10% on those samples? And what's a sample? Is sample for my consumption? It's an advertisement. Somebody, if I make shoes, I give a 2 size ka shoe and 11 size ka shoe. Now, wo tumko aa sakta hai, na mere bacche ko aa sakta hai. Wo to bhai is for display. It's not for consumption. Us pe aap tax 10%. And how do you implement this? So then look at another thing, another case of overreach. Now they say if you have a director in the company and you give benefit to the relative of a director. So CBD, the circular says, so the benefit will also qualify as a benefit on which tax has to be deducted. Where is the business relationship? It will be deemed to be so. कौन कह रहा है? CBDT कह रहा है. कमाल हो गया. Why don't you omit the parliament altogether? And then tell me, don't you have 56 for this? For people who are not connected to you in terms of business? What is 56 for? For such. So you have a multiplicity of proceedings, you have these 2 enactments, and you leave it a fertile ground for Sachin Jolly and Rohit Jain to prosper. Because I'm nearing 60 and I don't want to make as much money as these people do. I'm relaxed, but these guys are, look at them, they're hungry eagles. And so why do you want to do that? Okay. Then they say, if you give an asset for good to somebody who is promoting you, fine. अब मैं तो क्या करता हूँ, गाड़ियां रख लेता हूँ, गोल्ड भी अपने फिक्स्ड एसेट में रख लेता हूँ, अपने फिक्स्ड एसेट में रखूंगा, मुकुल के दे दूंगा, मुकुल ऐश करता रहे 10 साल तक. How are you going to check this? Let's come back to me or not? You see, these are things which Mukul, honestly, it didn't take us more than 20 minutes to understand. You read the circular, it comes to your mind. These combinations, it's not rocket science. यूज करके वापस कर दूं यार, क्यों? कौन ट्रैक रखेगा यूज करके वापस कर दूं? ओके, सैंपल को मैं दे रहा हूं, सैंपल यूज करके वापस कर देना. मैं चिट्ठी अब लिख के देता हूं हर केस में that I am giving you a sample, please put it on display, use it for as long as you want, but return it. It's not yours, it's a part of my books of account. I instead of removing it from my stock, I show it as a fixed asset. There you are. Then, as you rightly said, Mukul, what is a leisure component? What? You bring in a new word called leisure component. Your ordinary parlance may, as a common man would understand, obviously when you go for a conference, you will have drinks also. You will have some fun part also, some music also. It's a part of confidence. But when you use the word leisure component, a fertile ground for an intelligent officer to sit down and say, "Acha, मेरे को तो ये leisure होता नहीं, मैं तो दारू पीता नहीं. I don't drink, so ये leisure है. For me, it's not." There you are. Little things. Then one more thing. Now that's something which we need to discuss, Rohit and Sachin and Harpreet. That let's say I'm a salaried employee. I'm getting salary of 1 crore a year, and I engage Pallavi and I pay her 5 lakhs and some benefit also. Now on the benefit, do I need to deduct tax in spite of the fact that the professional fee which I pay is not deductible out of my salary? I'm making no claim for expenditure. Now, would you interpret arising from exercise of a business or profession by such resident also to mean that the deduction should also be in business? That's the question. Again, litigation. I would say yes. भाई अगर मैं उसका कोई benefit नहीं ले रहा, कोई खर्चा नहीं ले रहा, तो मैं क्यों उसमें TDS कैसे income पे दूं उसके ऊपर? I would say that, but let's see. Then, so anyway, one could go on. I think I have almost reached the full length of my discussion. So the moot question is, yes, your intent may be correct, and they are not entirely wrong when they say that a lot of benefits are hidden, are not known, because they get camouflaged in the myriad of expenses that you have in the balance sheet on the expense side, and you can always camouflage them. But can you not do an ABC analysis? Can you not list down the ones where you normally feel there is an escapement of income and not go into the bits? Don't say it includes all and also this. No, come on, for God's sake, 5 days of giving a car to a professional for use is something which is neither quantifiable, nor will it, it ought to be taxed, and nor is it worthwhile in terms of expenditure and the machinery available with the department to allow it such like expenditure to be tracked. What do you want to track? How much more do you want to track? So, well, friends, I think I'll stop here, and I'm sure all these points which I've just raised are all there with Rohit, Sachit, and Harpreet and Pallavi, and we're going to discuss them threadbare and also come out with possible solutions. And Mukul, I must congratulate you for having at least raised these issues before the CBDT and having the CBDT to respond, at least with a circular. You know where you stand. Now, obviously, you can further as a step 2, go back to the chairman CBDT as you've been promised and put forth these issues so that there can be further clarification and the possible litigation that is likely to ensue is mitigated at this stage itself. Thank you very much. Thank you for being very patient. Thank you.
Thank you, sir. Thank you for that brilliant address. I think it really puts the litigation and the interpretation that 194R is open to in its real context. And I think we'll always be students of the law and, you know, really break it down like how you read the act. I mean, I remember I had learned the act like that. So it was really wonderful to hear you. Thank you, sir.
Thank you very much, Pallavi. Thank you.
I'll now invite Harpreet to explain to us and put the context of section 28, subsection 4, you know, which uses the similar language as 194R, because I think after Sir's address, it is natural to look at 28.4 and look at, you know, once he's explained what is income, etc., whether it falls within the definition of income from business and profession. So Harpreet, welcome. Harpreet is a practicing advocate on record in the Supreme Court of India. He's also a qualified company secretary. He holds 10 years of experience in advisory and litigation in areas of corporate taxation, international tax, and transfer pricing. He's a litigation partner with AZB and Partners. So thank you, Harpreet. Thank you for joining us today, and I'll leave it over to you.
Thank you, Pallavi. Thank you, PhD Chambers, for inviting me. This is a very good opportunity and platform. I'll straight away come to the point, as Ajay sir has already laid down the foundation and context in which the pros and cons in which the 194R is to be interpreted. First, as a background, if I may also point out that by way of Finance Act 22, it was not only 194R which was introduced, but simultaneously explanation 3 to section 37 was also introduced, where again similar wordings of giving benefits and or perquisites was also given there. And this is also in the backdrop of the decision of Supreme Court in the case of Apex Laboratories, where the freebies which were given by pharma companies to the medical representatives, doctors and medical representatives, that the whole issue of benefits and perquisites was highlighted, and it has got into limelight. So the background or the backdrop in which 194R as it stood and the CBDT circular which has been and which would be discussed, there are various illustrations in respect to the freebies and given to the medical representative, and these examples are already there. So first, I would like to highlight the objective of this particular legislation, 194R. In the finance bill, in the speech of finance minister, it was specifically highlighted that it has been noticed that as a business promotion strategy, there is a tendency of businesses to pass on benefits to their agents. Such benefits are taxable in the hands of the agents. In order to track such transaction, it was decided to bring in this particular legislation. So the intent of 194R is to capture or to levy a TDS obligation in respect to business promotion strategy schemes which are there. Similarly, this is also coming out from the memorandum, which says that it gives a reference to clause 4 of section 28 and says that the value of any benefit or perquisite, whether convertible into money or not, arising from business or exercise of profession, is to be charged as business income in the hands of recipient of such benefit or perquisite. However, in many cases, such recipients do not report the receipt of benefit in their return of income, leading to furnishing of incorrect particulars of income. So the backdrop in which 194R was introduced is very clear, that it was to trap and to bring forth in light such benefits and perquisites which are being given but are not reported properly. Now, if we read this the memorandum in line with the language of section 194R, the wordings are identical. That is, the responsibility has been imposed on the deductor to deduct TDS in respect to such benefits and perquisites. Section 28 says that the value of any benefit or perquisite, whether convertible into money or not, arising from business or exercise of a profession. So the legislative intent is very clear that it is only in respect to the income which would be chargeable to tax under section 28(4) that this TDS has to be deducted on in terms of 194R. However, the CBDT circular, as Ajay sir was also highlighting earlier, has again trespassed its jurisdiction or even on this front, because in question number 1 itself, it highlights that it is not only in context of 28(4), the TDS obligation would also lie in terms of 41(1), which could never be the intent of the legislature. It was never the intent. However, it is neither coming out from the memorandum, not from the speech of the finance minister, but it is subsequently that in terms of the CBDT circular, the scope of this amendment, this 194R has been expanded. This is point number 1. If I'll just continue in this line, the legislative intent or the judicial precedents on the applicability of section 28(4), it's quite well settled. As Ajay sir was referring to the decision of Mahindra and Mahindra, the law of the land is very clear that 28(4) has to be seen only in context of non-monetary benefits and non-monetary perquisites which are being given. But by virtue of this CBDT circular, the machinery provision has been enlarged and would be in conflict with the charging section, which would be 28(4) in this case, because dehorse the charging section, the machinery section cannot work. So even on this point, it is very important that 194R has to be construed in line with the charging section, which has to be 28(4). And this particular phrase, benefit or perquisite, although has been used distinctively at various other provisions in the Act, but specifically if we do a threadbare analysis in terms of the identical wording which is there, it is only in 194R that 28(4) it's similarly placed there. Now, if we take this discussion on the interpretation of 28(4), 28(4) again has to be seen in context of real income. It cannot be in context of any hypothetical or notional income. In terms of the multiple illustrations which have been given, those illustrations also tend to capture or bring within its domain some notional income which may or may not arise, but they would be subjected to tax in terms of 194R. That is what the intent of CBDT seems to be, although it is not coming out from the section 194R, but the clarification which has been subsequently issued, it seems that there the intent of the legislature has been expanded. Now, to add on to that, the CBDT circular has exercised its power under section 194R2. It is not in context of 119 or 120 that these circulars have been issued. 194R, it gives CBDT the power to issue guidance or guidelines to bring clarity to the provision. And 194R3 specifically provides that whatever changes and guidelines they are being proposed, they have to put in before both the houses of parliament. So if we read both these two provisions conjointly, 194R2 and 3, that does not mean that there is some legislative power bestowed on CBDT in terms of subsection 2 and 3. It could never be the intent of the legislature. It is only in respect to some guidance or some ambiguity which is there in law. It is only in those contexts that CBDT can bring in the clarification. Even that has been put in as a subject, as a condition to to be put before the parliament. Now, coming back to the point of 28.4 applicability.
Harpreet, since we have about 10-12 questions which needs to be addressed, so just try and conclude this particular aspect of your answer, and then let's move on to the other ones, right? Just sum it up, and then let's move on to the next question, please.
Sure. So as far as this particular aspect is concerned, on the CBDT circular, I've highlighted this part. And additionally, on 28.4, the preconditions which are there, that there has to be any person who is responsible for providing to a resident any benefit or perquisite, whether convertible in money or not. Now, I think the judicial precedents are very well there, that it has to be only in context of the non-monetary benefit that 194R may be triggered. And if for any reason, if we are to assume that 194R is to be read dehors 28.4, then even in that situation, it has to be in respect to arising from business or exercise of profession. Now, arising from business or profession, the meaning is very well settled, that it has to be in context of the business income only. It cannot be in respect of any capital receipt or capital asset which may be involved in the particular transaction. It is only the the business income, which could be a subject matter of 194R and not beyond it. The next point which I would just like to highlight is in context of the same CBDT circular, there is a cross-reference of, in reference to 41, section 41, there is again an ambiguity, because section 41 has to be in respect to cessation or remission of a trading liability. Now, where there is remission or cessation, the deductor is already a sufferer. You cannot make him suffer more, that a liability which is being remitted or seized from his books of accounts, you are again superimposing a condition of TDS, that rather than deducting that, apart from the waiving of that particular liability, you are again imposing a condition that deduct TDS and put that also as a part of the condition. So that could never be the legislative intent of 194R at least. So even this is in direct conflict with the intent of the legislature, what the CBDT has tried to put that as in the circular. The next is the law is very clear that in case the legislature wants to expressly overrule a particular judgment of Supreme Court, as Mahindra and Mahindra is very well settled, which has been recently followed by Bombay High Court and all the other jurisdictions. If the intent of the legislature was to overcome all these judgments, let's presume for the sake of argument that all these judgments were to be overruled, then that overrule has to be in context of first bringing in an amendment in the charging section. That would have been under 28.4, or maybe by bringing in any other charging section where the scope of the section could have been expanded. Alternatively, the amendment has to be, the amendment was to specifically consider these respective judgments. Let's say Mahindra and Mahindra was to be overruled. So the legislature was to specifically say that no, this Mahindra and Mahindra decision of Supreme Court, we are not agreeing with this, considering the dynamic change in the legal position. And therefore, we are expressly overruling it, because implied ruling of a Supreme Court judgment is not permissible. So even on this point, 194R requires interpretation so that it gives purposive interpretation. Simultaneously, the legislative intent is taken into account. Thirdly, the vires of the provision is intact, because if for any reason we are reading the provision anyways, which is in conflict with Supreme Court judgment, or which is in conflict with the charging section, then the provision per se would become redundant. 194R. Last is the point, I can see that the clock is ticking. The last point which I'll just highlight is that the provisions of 194R says that the event of making this a particular deposit or deduction is before providing such benefit or perquisite. So this could be possible only in scenarios where some benefit is to be given. The benefit which has already been given cannot be subject matter of 194R. Otherwise, it would lead to impossibility of performance. So it could be only those benefits and perquisites which are anticipated and which are to be given as at a future point in time. Only those could be a subject matter of 194R, not the benefits as a retrospective benefit which have been given. These are the broad pointers which this is how I interpret it. I'll hand over the session to Pallavi ji.
Thank you, Harpreet. Thank you so much. I think it puts the context maybe a little theoretically, but I think without that, we can't go into the legality of it. So I'll invite Rohit ji next. Rohit ji is a partner with Vesh and Associates. He's a lawyer by profession and also a qualified chartered accountant. He's a senior member of the tax group in Delhi, and he's been with Vesh since 2001. His practice covers all areas of direct tax, including income tax and Benami law, and he's been associated with various litigations. Rohit ji, I welcome you to the PhD CCI webinar on 194R today. And I request you to give us some little bit of legal context, but then let's, I think, get into the practical questions. The audience is, posed already 20 questions I can see on the board. So I'll request you to keep it short, sir, so we can go into the questions. And, Nitin also, who's here, has a lot of implementation issues from the consumer good industry. So it will be nice if, our panelists of experts can actually help answer maybe some of the questions most of us have today. Rohit ji, I'll leave it to you.
Yeah, thank you, Pallavi ji. So, just to start with Dr. Sharma, chairman of the session, Mukul, the co-chairs, Pallavi ji and Sachet, and my fellow speakers, and above all, our president of ITIT Bar Association, Mr. Ajay Wadhwa. So, Mr. Wadhwa was as at his usual best when he started with giving a keynote address and put the context, the entire issue of 194R into a particular context. Now I'll just very quickly give my thought process on 194R, and particularly in the context of the circular which has been issued. As everyone has said that the intent seems to be right. The intent seems to be right to tax the unreported benefits and the incentives which were earlier getting untaxed because of those benefits not being getting tracked. The problem appears to be in the implementation, and the problem has got worsened because of the complications which has arisen on account of the circular which has been issued by the CBDT, which was intended to clarify the interpretation and make the issues remove the difficulties in implementation of the provisions of section 194R. But it seems this has created more difficulties in its implementation itself. Now, Harpreet has touched upon this 194R2. Just to see the language of section 194R2 itself, its section is very clear. I think there is nothing wrong about the section and the wording, the intent of the legislature when it says what the CBDT is permitted. The CBDT is permitted to come out with a circular in order to give effect to the provisions of this section. So the circular or the instruction or any clarification which the CBDT gives has to be in accordance in order to give effect to the provisions of the Act. So therefore, there cannot be a circular or an instruction which is going beyond what the provisions of the Act says. When the earlier speakers talked about perquisite and benefit, we all understand what perquisite and benefit is. There has to be some real or tangible benefit which must arise in the hands of the resident individual in the course of his exercise of his business or profession. In the absence of any perquisite or benefit, there cannot be a trigger point to invoke the provisions of section 194R. I am reminded of an old decision of the Supreme Court in the case of Arun Kumar, which was in 2006. That was rendered in the context of the rules which were notified for the purpose of computation of perquisite in case of providing rent-free accommodation or providing accommodation at a concessional rent to the employees. In that context, the Supreme Court specifically held that the trigger point for applying the the rule for determination of perquisite in the hands of the employees, that there must be concession, and unless there is a concession, the very fundamental provisions of section 17 are not interacted, and therefore the court held that notwithstanding the fact that the rule specifically covers a particular situation seeking to tax a concession in the hands of an employee, since the fundamental jurisdictional condition itself is not met of the statute, therefore the provisions of section 17 cannot be applied. Drawing analogy from the very said judgment, if we were to apply it in the context of 194R, the trigger point, according to me, as Ajay ji also clarified with reference when he bifurcated the provision into 5 small parts. The trigger points are satisfaction of those 5 jurisdictional fundamental conditions. And if either of the 5 jurisdictional fundamental conditions are not met, according to me, 194R cannot be triggered. And if 194R cannot be triggered, nothing in the circular or the instruction or any clarification which may be issued by the CBDT cannot, create an obligation on the person making any payment to apply the provisions of 194R to withhold the tax. That is one. 194R2, I think Harpreet also touched upon very quickly, is a part of a delegated legislation. The delegated legislation, the delegatee cannot go beyond this fundamental substantive provision. And when 194R specifically says, in order to give effect, that is basically a removal of difficulty provision, in order to give effect to the provisions of the Act, then how can a circular, be issued which lays down certain parameters whereby 194R is to be applied, even though it is going beyond the provision of the Act. Now, just to highlight few instances where 194R, the circular is going contrary to the substantive provisions of 194R. Now, for example, the circular talks about cash discounts. Now, surprisingly, it says if there is a difference between the listed retail price and the amount realized on sale, that is deemed to be a benefit. And they have tried to give you a benefit by saying that in order to remove difficulty, even though there is a benefit, therefore, but still we are saying that don't deduct TDS under 194R. You see, according to me, I fail to understand, just because you are selling a product at below the listed retail price, where is the benefit? Now, just to give an example, you see, or every product you have to mark an MRP. Say the MRP of the product is 100 rupees. Now the sale price to the wholesaler is say 60 rupees. But the circular indirectly seeks to say 100 minus 60, which is the sale price to the wholesaler. 40 rupees is the benefit. Though it is a benefit, in order to remove the difficulty, we are saying that don't deduct DTS. Where is the question of benefit? That's the sale price to the wholesaler, 60 rupees. Where is the benefit of 40 rupees? Then kindly see the anomaly. There is an assumed benefit of 40 rupees, which, but for the removal of difficulty, they would have been subjected to 194R. 60 rupees would have been subjected to either 194R, 194Q or 206. So the entire 100 rupees, even though the realization is only 60, the entire 100 rupees would have suffered taxation. And there is no profit of that 40 rupees to anyone. There is no income. As Ajay said, there has to be some income. So on an amount of sale consideration of 60 rupees, there is a TDS on entire 100 rupees. Whereas the actual movement of money is only 60 rupees. That is one example which they have given. Look at the example of reimbursement of expenses. They say that even though the professional goes for the for any assignment, now if the bill is in the name of the company, there is no reimbursement. That is a pure reimbursement. If the bill is not in the name of the company, then it is not. It is in the nature of an obligation being met, and therefore 194R applies. I fail to understand how the principle as to whether or not it is reimbursement can change only on account of the fact whether the bill is in the name of the company or not. That is the second example. Write back of loan, as Harpreet and Ajay also pointed out, as per Mahindra and Mahindra, as we all understand, as students of law and practitioners, the Supreme Court says that write back of loan is not taxable under 28(4). Now, they refers to some judgment of in the case of Madras High Court. Now, that Madras High Court was part of the batch in the Mahindra and Mahindra case, and specifically overturned in Mahindra and Mahindra judgment. Still, they rely upon the Madras High Court to say that 28(4) gets triggered, and therefore the TDS implications of 194R is applicable. Now, Another, you see, these are some of the anomalies, and of course we will deal with all these while we go along. 194.3, 194R3 says, it says the circular which is issued will be binding on the income tax department and the tax and the payers. So the deduction of tax is mandatory. Tomorrow, if you don't deduct in line with the CBDT circular, they will come back to you and say there will be a disallowance under 40I. There will be a TDS default, 201 default. There will be penalty. There will be prosecution. For what? Even though there is no benefit, you don't deduct. Since you did not deduct TDS according to the interpretation of the CBDT, therefore all these consequences follow. Now, what is the next way forward? We can only suggest and advise the CBDT, to come out with some clarifications. Not, of course, like the clarification which they have issued now. Those clarifications should actually be for the purpose of removal of difficulty and should be in line with the substantive provisions of the Act, rather than going beyond the substantive provisions of the Act. Otherwise, there are chances this provisions, at least the CBDT circular, because of 194R3. Mind you, this circular is not under 119, as Harpreet also pointed out. So therefore, all those judgments which are in the context of 119, which says that only benevolent circulars are binding and non-benevolent circulars are not binding, may not come to the rescue of everyone. 194R3 specifically says it is binding on the, the payers, on the tax deductors. So therefore, one has to be very careful. Of course, one can rely upon the Arun Kumar judgment, the trigger point of perquisite, all those 5 fundamental conditions, but this is going to be actual difficulty in its implementation. I think this is my, take on this CBDT circular.
Thank you, Rohitji. Thank you so much for that quick synopsis for us. I think between Ajay sir, yourself, and Harpreet and Mukulji, you have really told us what are the difficulties that you are facing in interpretation. But the man on the hot seat itself is Nitin, who is the head of tax in Panasonic. And as we all know, Panasonic is a consumer goods leader, so the number of schemes he's implementing for sales promotion and what he's hearing from his, teams on the ground. And he's sort of the man who's saying, no, you can't do this. So Nitin, welcome to the PhD CCI webinar today. I'll just introduce Nitin. Nitin is a fellow member of the Chartered Accountants of Institute of Chartered Accountants of India. He comes with more than 15 years of experience. Controversy seems to follow him. He was with Sony India for 10 years, where I think Sony saw one of the largest controversies in transfer pricing. And now he's the head of tax Panasonic India. With these new guidelines of 194R, Nitin, I think most of our members want to hear from you what difficulties you are facing. And, if any of us can help you or give you some answers, it will be a pleasure. But, and I think all our members want to hear and know that, they're in the same boat. Maybe they're also feeling the same pain that you are. So welcome Nitin, and I'll hand over to you.
Yeah, thanks, Pallavi. And thanks, Mukulji, for inviting me on this forum and allowing us to put our issues in front of this forum. And also, I would like to thank Rohitji, Harpreetji, and Ajayji for giving the legal interpretation of these provisions in the circular and the issues around these. But definitely industry would not like to go into those litigations and would not like to invite those litigation, because ultimately, first of all, we have to deal with the lower tax authority who does not want to listen any legality around the provisions and all. So if they have some sticks in their hand, then they are going to use that. So this circular is going to put the sticks in the hands of lower tax authority, definitely. Although the circular was issued with the clear intention of making the guidelines for the clients and assessees. However, there has been extension of scope by way of this circular, which is creating an issue for us. So before issuing this circular, we were very much clear about the intention of this circular, of this law. And it was clear the unwanted, unreported incomes has to be taxed by way of this TDS provision of 194R, like foreign trip schemes and gold coin schemes, and the gift to the trade partners. So we were happy to make the compliances around this, and we were ready to do the compliances. However, by issuing this circular dated 16th of June, the scope of this law was extended to the monetary schemes also. So now implementation around these monetary schemes, first of all, each and every schemes now has to be vetted through the from the tax perspective. Now marketing team of each company has to discuss before launching any scheme to the tax team of the company. So this is definitely delaying the decisions, and in this dynamic where those decisions delay in the decision will definitely cost to the company. And I would like to basically divide my issues or the industry issues in 4 parts. First is related to the monetary schemes. For example, the industry or company is going to issue incentive scheme for the tier 2 or tier 3 partners, accounts of the company. And these incentive schemes are based on the achievement of the specific target sale or target purchase. And now the company, based on the achievement of the targets, they would basically pass on the incentives through the distributor channel. However, if because of this 194R, we have to basically do the compliance of 194R, how we would be basically able to deduct that, because we are not making any payment to those tier 2 and tier 3 partner. They are not in our books of accounts. So we have to basically recover the TDS from them. And that is quite cumbersome, quite impossible for the companies to basically make accounts of all those tier 2 and tier 3 partners. So one is that, and second is around the business launch events or periodic dealer meets. So like Rohit ji and Ajay ji mentioned that leaser component, which is very subjective. Now, again, we are putting the stick in the hands of lower tax authority. So what is leaser component, what is not? So who is going to decide that? And definitely some entertainment would be there in those events because these are long stretched events. And specific issues has been dealt by this circular, like if some expenses are there prior to event date or post event day. Imagine a situation where some dealers which are there in the south region of India, and they have to travel to north region for attending these dealer conference, and because of limited flight options, they have to travel one day before, and the company is providing the accommodation and the flight expenses to them. Then how these are going to be treated as a benefit? So those kind of difficulties are there in implementation, and more clarity is required for basically make those dealer event more smoothen. Otherwise, every time we have to basically check all those expenses, all those dealer meet events, what kind of leaser components are there. And moreover, suppose if you want to do the compliances, how we are going to make the compliances? Then first of all, we have to identify what are the components in this particular event which can be treated as a leaser component. Then what are the expenses around this? How do we allocate those expenses? Then how many participants were there? How to basically allocate those expenses to those participants? Then make the accounts of those basically participant and recover, issue the debit note to those participants, which somewhere are not even in the books of accounts of the company. So those are the practical difficulties around this. And then third portion of my discussion is around the business promotion expenses. A lot of expenses are being done by the brands, like promotion of distribution of promotional items, like marketing flyers, standees and all, and then providing the sales staff to the retail counters. And this is basically intended to push the secondary sales, and ultimately this will definitely will benefit to the brand and enhance the sale of the company. And somewhere incidental benefit will be there to the retailer also. So how this is going to be treated by the tax authority, the clarity is required, because ultimately the brand will, whatever expenses brand is going to incur, that will incidentally benefit to the some or other retailers also. So the complexity to basically recover those TDS and doing the compliances. So there are two options: either we would recover or we would basically bear the cost of those compliances. So definitely it will going to increase the cost of the those expenditures. So, and then last but not least is around the freebies. Like circular is giving the example of buy 10 get 12. So, but every scheme is not in the structure of buy 10 get 12. Suppose if we are going to launch a scheme and in which over a period of time we are giving a target of let's say 50 quantity. If you are going to buy 50 quantity of this particular product, you will get 2 quantity free. Then definitely those 2 quantity will go separately as a separate delivery challan. So then how basically those 2 quantity will be treated by those tax authority? How to basically have those calculations to substantiate that these are basically falling under a particular scheme. So every time something is going to be given separately, those would be basically checked specifically by those tax authority. So somewhere all those expenses like all business promotion expenses, business launch event, all has been put under the lens of the tax authority, and it is going to difficult to substantiate every time and to provide the document maybe after maybe 3 years 4 years down the line. And in such kind of investigation of TDS, if such documentation would be required, the flyers are available or not, those person in charge are available or not. So those are practical difficulties in making the compliances. So that's all from my side. Pallavi ji.
Thank you, Nitin. I think that really puts the controversy in its real context. You know, somebody who is on the ground and actually has to implement it, the problems that they are facing. So thank you, Nitin. Ajay sir, would you like to answer any of his questions in terms of, you know, the difficulties that he's facing? I should just tell you that the brand ambassador is Ranbir Kapoor and Katrina Kaif.
Oh. I will, it won't come free. He has to arrange a meeting with them. I will share this with them and then I'll try and resolve. But I tell you, Nitin,
Yeah.
Your practical questions are scary. Now, for example, what ultimately it boils down to is, as I understand, A, how do you determine the perquisite? And how do you document it? Now, of course, we are stretching it very far when we say that any expenditure that we incur will have some benefit accruing to some XYZ who are our business associates, but we won't even know how the benefit is percolated to them. But yes, you are right. Some bright officer might just apportion some income there and some benefit there and determine it. So I see your point. But my view is, of course, Mukul and Pallavi and Sachit have their jobs really cut out to get after the CBDT, and so will we. We, in our own way, we should also do this because this is actually scary. It's an eye-opener. I tell you, each one of you, starting with Harpreet, Rohit, and then Nitin, have really supplemented the points. I thought I was fairly exhausted, but you have gone far beyond that. I must compliment you on this. Now, my view is that while we await the circular, let there be rationality. Let it be a common sense approach to this. Because common sense is what ultimately is going to prevail when it comes to a judge to decide. Because if you go into those hypo-technicalities and you set precedents for others, you're big. You might still be able to do it. What about people, hundreds and thousands of other business people? They can't envisage, they can't document this. And if you don't document it, then what happens? Then an ad hoc rate can be applied. Then you are in the hands of the officer. Because if you can't prove it, then the subjectivity is there. So firstly, I feel a common sense approach. Secondly, reasonable amount of determination, not going into too many specifics. If you go into too many specifics, you open yourself to interpretations. Don't do that. And thirdly, and very importantly, what worries me is your final question where you say that if you buy 10 and get 2 free. Now, obviously, it'll go by way of a separate challan. It'll go by way of a separate invoice, which means that in every case, wherever, even if it's an integral part of your sale, it's something like a discount. This benefit is like a discount. It's not a benefit of that kind. It's in fact reducing the cost. So my only, from my, as far as I understand, we need definitely clarifications, but please apply the common sense approach.
Thank you, sir. I think that's the I think the mantra that, you know, when new laws and new legislations come in, which are not clear, I think the common sense approach is the only way that interpretation and law can develop. So thank you for that.
Thank you.
I will ask certain questions that we had in our mind when we were framing this webinar. One of the questions was that 28.4 and 194R both don't define what is benefit and perquisite. You know, Harpreet and Rohitji and yourself have said that there are certain decisions, you know, that have determined what is benefit or perquisite in terms of either in Mahindra and Mahindra or in terms of for employees what it should be. But those are both in context of either a capital asset or in context of an employee. You know, while 28.4 has always had the term benefit and perquisite, it has never been sort of interpreted in this context of cash or non-cash or sales promotion. You know, like you said that though the pen is welcome, sir, you know, though you said that, you know, you give a pen or you give Mukulji the use of a car. I mean, these things, are they really benefits or perquisites? So if our audience is to look at the definition of what is really a benefit or perquisite, where should they go? Rohitji, would you like to take that?
Yeah, sure. I was not aware. This put to me.
Oh, sorry.
No, so basically these two terms, of course, these are not defined anywhere in the Income Tax Act. But as you rightly said, these two words are not new to the Income Tax Act in the sense that, you know, these two words, where same words are used in section 28.4, and the word perquisite has been used in the context of, you know, section 17. Now, you see, the very fundamental of this is there has to be some real tangible gain or an advantage. As you said, benefit or, you know, perquisite means there is some benefit in the sense that you gain something because of, so for example, 28.4, because 28.4 exactly uses the same expression, benefit or perquisite arising in the course of business and whether convertible into money or not. I think I must clarify, the Supreme Court in the case of Mahindra and Mahindra, when it says that the capital assets, the write-off of, you know, the loans is not taxable under 28.4, they specifically restricted it in the context of whether convertible into money or not. And ultimately said that what section 28.4 contemplates is only non-monetary benefits. It does not contemplate monetary benefits. And therefore 28.4 is not triggered when there is a write back of, you know, a loan. And that is precisely where Nitinji was saying in the context of, you know, 194R. The initial understanding was this probably was intended to apply to non-monetary benefits and not to monetary benefits. And you see, the circular, when it talks of this being applicable also to monetary benefits, and they seek to, you know, rely upon the proviso to subsection 1 of 194R, I think may not be correct, because what section 19 proviso to section 194R, if we see it very carefully, it talks of where the benefit or perquisite, as the case may be, is wholly in kind or partly in cash and partly in coin. It nowhere talks of wholly in cash. So therefore, when the circular says this also applies to monetary benefits and seeks to rely upon the proviso to subsection 1 of 194R, according to me, that is not correct. So therefore, just to be gain, there must be some gain or an advantage. There is a judgment of the special bench in the case of Saipam. There is a judgment of the Supreme Court in the case of, you know, the Arun Kumar, as I pointed out. This actually means that there must be an advantage or a gain to the recipient. And there is one more judgment which is also important in this context, is the Supreme Court judgment in the case of L.W. Russell, which was rendered in the context of perquisite, and which says that perquisite only covers vested right. It does not cover contingent rights. So therefore, just to summarize, the perquisite or benefit, applying the common sense approach, as you know, Ajay Vadwaji has laid down, which is a very good, good approach, would mean that there must be some advantage or gain. And when we apply this common sense approach to the provisions, probably I think we'll be able to find out answers to many of the issues. But if we go by the circular, of course, create some difficulty in implementation. But that, according to me, is the meaning of the word benefit and perquisite.
Thank you, Rohitji. So I think at least it gives us some clarity of what should be benefit and perquisite. And I think Harpreet said that it should be a real benefit, and not a perceived benefit. That also brings me to my next question, which is that, in the context of the circular, all of us professionals, and even, like in Nitin's case, they have a lot of sales forces, who are maybe employed by contractors and not employed by them directly. There's a lot of out-of-pocket expense that is incurred because it's not possible to, keep on reimbursing small expenses. In the context of lawyers also, there's a double dip kind of a thing, because one, the lawyer is a consultant with the law firm, and the law firm is a sort of consultant with the client. So there is a out-of-pocket expense that the firm bears for the client and the lawyer bears for the firm. So, I mean, how is out-of-pocket expenses to be interpreted, and is there a double dip in terms of out-of-pocket expenses? Harpreet, would you like to take that question, since I'm sure you struggle with this as well?
Yeah, sure. So practically, you are absolutely correct. And if you look at CBDT circular in isolation, then the way out is that the invoices and the bills which are being raised in the form of out-of-pocket expenses could be directly addressed to either the firm or the company, the client, because there it may not be necessary then that the lawyer has to definitely incur that cost. But this is just a temporary solution. But at the end of the day, if these are pure reimbursements, then as the other co-panelists were highlighting, that if it is not necessary that since there is no income element, there should be any applicability of 194R per se. So coming back to Nitinji's perspective from starting, that every other thing was theory, but practically considering the circular, how it has been drafted, it would be very near future that somebody would take a lead and challenge it before a court of law, because these are the practical challenges and they cannot be resolved only by relying on the mercy of an assessing officer. You would be only going there and trying your luck. But considering the CBDT circular, which is already binding on him, even he would have very little choice of not implementing it. He may just see the documentation in whichever form you make, but at the end of the day, the benefit would be seen. Like the examples, all the advertisement and marketing expenditure examples which you were giving, at the end of the day, we can't deny the fact that there is some benefit which is being transferred by the company to these vendors or maybe sub-vendors who are there. So unless and until there's clarity in the circular, the compliance, the assessing officer is bound by that. And he has to adhere to that part. And the OPs and the data which is to be maintained, what at best could be done is, in the meanwhile, the common sense approach, what was there, in terms of documentation, you have to comply that how the back-to-back link should be there. So if just as an example, if I'm traveling to High Court just in a cab and there's a charge of 500 rupees which has been charged by the cab driver, I have to link it. The complete data has to be maintained starting from my going to High Court, representing that particular company to the invoice, and then raising my separate invoice. So this would be the complete chain. Unless any of these things is missing, the whole there is an exposure of the 194R being triggered. So from OP perspective, there would be extra compliances to be done.
Sure. Thank you, Arpreet. So one of the questions that is also raised is, and it's one of the examples in the case laws that the circular has. And Ajay sir, if I may put this one to you, that, there's a case law which says that people collected money and donated it. And then they said that no, under 28(4), they don't need to see income. So what happens to, places like canteens that are being run on a no profit, no loss basis and have, subsidized food, and they are run through contractors, and all the employees of the contractor, or the workers actually, some contractual, some permanent maybe, get subsidized food in those canteens. Or there are hospitals being run by charitable institutions, there are Section 8 companies, there are CSR objectives. So all these also receive voluntary contributions, they receive donations. They are actually benefiting these organizations ultimately, but these organizations may be exempt from tax. Section 11 and 12 may apply. So what happens in those cases? Is income only taxable income per se, or because it's not arising from business, is it exempt, or the subsidy in canteens is exempt? So there's no clarity on a lot of these issues.
True. While we are discussing, what is the fundamental source of this problem? The fundamental source of this problem is the response to query number 1, where they say whether it is income or not is not important. That is the fundamental source. And from there, mushrooms all these queries. Reimbursement, there are umpteen number of decisions. The best is 428 ITR 398, which includes all the other decisions, Industrial Engineering Corporation and all these. And what do they say? They say, while interpreting circular number 715 on 194C, they say that if you have a separate bill for reimbursement, there is no income element in it. And that's standard, that's established. So the problem is germane out of the query number 1. You say it applies all across, income or not. Now, if that is addressed, then all these things are out of the whole system. Now, your question perhaps is answered somewhere in one of these queries, which says that if you make a payment to a government hospital, because there is no business connection, there is no income which the government hospital is earning by way of business as a recipient, therefore this section doesn't apply. So probably in the case of a canteen also, it will be governed by the principles of mutuality, or 11 or 12, where the income is otherwise exempt, is not in the nature of business. So the condition is that the recipient of the benefit must be into business and profession. And I'll go to a step further. And I'd like to cite this decision for everybody. There's a very good decision of the tribunal. It's in the case of R. Parthipan, 72 ITD 289 Madras, where, you remember I gave that example that when there's an artist who's given voluntary money by the spectators, and that's not in the nature of income, there they go on to elaborate what section 28(4) is, and where they say 28(4) will necessarily apply where business and profession is being carried out by the recipient. And that's not all. The recipient must also be rendering services to you if it's a professional. It cannot be simply because you are carrying out a profession and I give you money without you having rendered any services, or I give you any benefit without you having rendered any services. So therefore, that relationship is important to be seen. So every time you decide, you need to decide whether it's a benefit or not, you have to see whether there is a business connection. Is the recipient doing business? Is the recipient raising invoices on you for services? And if that is the case, that's when the benefit test comes.
So if I just complicate this question's answer a bit more. Sir, what happens in the case of independent directors? or directors that have become chairman emeritus, etc., where they are actually not rendering any service per se in the context of the Income Tax Act. But under the GST rules, they are subject to GST under reverse charge. And these directors also report, as far as income tax is concerned, their incomes of directorship fees, etc., in income from other source. So it's not part of 28(4) for the recipient. It is actually part of, like you said earlier, section 56. But let's say the director got a car, he's chairman emeritus, he's not an employee, he's an independent director per se to that in that context, and he has use of car. Or there's an independent director and the board meeting, let's say in a lot of multinationals is, in a different city, suppose. Or there is a car given to an independent director. What happens in that context, sir? Is 194 applicable in the context of an independent director?
See, Pallavi, the way you championed the query, the answer is there. I mean, I couldn't have put it better. The answer that it's manifest in your query itself. And the way you also explained that it's an income from other source, it's not income as business, it's not taxable as income. It's a settled law. If it is settled law that it is taxable under the income from other sources, obviously you're not rendering any professional service, you're not rendering any business. There's no business activity. It should be out of the scope. But don't forget, in one of the queries, what do they say? They say if you give service to a relative of a director who's unconnected, here there is some connection. Relative is somebody. He says, all right, maine de diya. So they say the benefit that you are giving is because the director is in service with you, and therefore, obviously, that person is not a stranger. You are in effect giving it to the. So see, it is. You get the power to legislate, and then the CBDT says, well, we will legislate and tax everything and anything that moves. That's in the air. That's how it is. But that's not it. See, there is no clear line of thinking. There are contradictions within. In your case, again, not following the common sense, but following the legal approach. No question of any TDS. If because these very examples, they say that if you make any payment to a government hospital, it's not business income. If he's not rendering any business, therefore you don't deduct tax. Same here. Extend the analogy. But then the contradiction also is there that if you give it to the director. Well, what do you do, Pallavi? That's what we are all here, and that's why we are all smiling and happy.
Except Nitin, sir, who is facing the wrath of it.
Yeah, he'll have to besides working on documentation, he's signing checks for us. That's the worry that he has, I know. And he's not even to be seen now. There he is. Okay.
So I'll just ask this last question, maybe to Rohit ji, and then hand over to Mukul sir for all the questions that I think our audience is asking. I'm seeing on the board we have over 33 questions. So Rohit ji, what about the context of diminishing benefit? And I'll leave it to your CA come legal acumen. So if you get a car in year 1, and then that car continues with you, and there is a diminishing benefit year on year of the use of that car. What happens? Like sir said, ki petrol mera tak chal raha hai. What happens with diminishing benefits, where when you get a house or you get a car, which in year 1 is income, but what happens in year 2, because the car is still there and the benefit is still there and the use is still there. So I'll just ask you this last question.
I think in the context of the computation of salary income, there are specific rules governing this kind of situation. For example, when the car is being provided, then there is a methodology to determine the perquisite value of the car. Similarly, in case of house, there is a rule 3 which talks of determination of all this. We ultimately, the point over here is when we say that there is a diminishing benefit in the sense that the value of the car is depreciating, and to that extent there is a diminishing benefit. But you see, ultimately what you are using the car for, you are using the car for the purpose of commuting. And according to me, the arm's length principle probably will come over here, and in order to determine the taxable value of the benefit or a perquisite, you will have to do an arm's length analysis and determine what is the fair value of that benefit. And the fair value of that benefit probably will have to be subjected to TDS under section 194R. Of course, there cannot be a straightforward answer to this question. This question itself is highly complicated. But I can only say that one has to, reasonably determine the taxable value of the benefit or the perquisite in this kind of a situation, and then subject it to 194R. You see, one very important fact or aspect which probably will all have to consider. You see, what the person who is providing the benefit, he's only deducting 10% TDS. Look at the person who is actually receiving the benefit. He has to bear another 23% or 25% of taxation, because he may be falling in the slab of 30%, 40%, depending upon the level of income and the surcharge which is applicable. So the payer is only deducting 10% TDS, but the recipient of the benefit and the so-called benefit, if at all any, will be subjected to higher rate of taxation. You see, in the earlier question when Ajayji was answering, that's a very important question of subsidized meal. This question, is coming to us from various quarters. What happens in most of the, big organizations, particularly MNCs or any manufacturing organization, there is one set of employees who are on your own rolls. So that is subject to 192. There is no difficulty at all. There is one very large chunk of, employees who are on contract basis. They are employed through contractors. And the same kind of, the services, or what you can say, for example, meals. You have a common canteen wherein, subsidized meals is provided to your employees. It is subsidized meals is also being provided to the contract workers. There may be, say, for example, 100 rupees is the cost of the meal. Out of that, you see 20% may be recovered from the contractor. 80 rupees, you may not be charging it. Now, the issue arises whether this 80 rupees is benefit. And if it is benefit in whose hands? Because the contractor, you will be charging 20 rupees from him, and the 80 rupees someone can say is the benefit to the contractor. But contractor is not earning anything. Now, if a poor contractor, he may be receiving some commission for, providing those employees to the company. Look at the, problem of on that 80 rupees of so-called benefit. You will be deducting 10% TDS, which is 8 rupees per worker. And there is no benefit to the contractor, because ultimately what is he doing? He is simply, the beneficiary of the meals is the workers. So, and you see, also one has to see it in the context of, Contract Labor Regulations Act. Because under the Contract Labor Regulations Act, what happens is the principal employer continues to be the company. Even though the employees may be on the roles of the contractor, but you continues to be the principal employer in order to safeguard the interest of the worker. Now, in that situation, can you really say that any benefit or perquisite is being given to the contractor? Because what contractor is doing, he is only a pass-through entity. He is only a via media. He is only a person in between who is facilitating this entire process. But the point is, there is no clarity. There is no clarity as to what real is 80 rupees really subjected to tax or not subjected to tax. I think these are very important issues. Look at the contractors giving uniforms. You are giving uniforms to your employees. You are giving uniforms to the contract workers through the workers to the contractors. Now, what contractors does? He simply raises a bill on you that, look, these are the 100 rupees uniform I have provided to 100 workers. Reimburse this money. Now, someone tomorrow can say in terms of the OP, answer, someone can say the bill is in your name. It is your obligation being met by the company. We will deduct 194R. But there is actually no benefit. There has to be some benefit in that context. And there can be so many examples. You see, Diwali gifts. This question is repeatedly coming to us. How do you determine Diwali gift is 194R or not? You, in a company like, of some huge company, you are giving thousands of gifts. And you are giving gift to everyone. You are giving to ITAT bar president. You are giving gifts to dealers. You are giving.
No. If you are giving it to me, there is no problem at all. Because
you are giving.
मैं consumer हूँ. Diwali gift खुल के दो, कोई दिक्कत नहीं है. उसमें कोई business relationship थोड़ा ना है यार.
Free will, is it free will?
हाँ, उसमें दवा जितना देना उसी दिवाली में ही डाल के दो सबको, कोई दिक्कत ही नहीं है.
There is a threshold also. There is a threshold also of 20,000.
You see, when it goes to the dealer, someone can say 194R applies. What happens to the customer? Sir, you are on mute.
I think Rohitji, we have about 25 questions.
Mukul, if you go to an ITO, उसको 25,000 रुपए का आपने गिफ्ट दिया, उसको भाई साहब 10% TDS काट के मुझे दे देना जरा। तो आगे से आप यही ध्यान, नितिन आपके लिए डॉक्यूमेंटेशन यही है, जिसको भी दो, जिसके पास ऑफिसर को जाओ उसको कहे यार TDS काट के दे देना, ठीक है ना?
So I
think
think
I was only highlighting these issues. These are all practical, implementation issues which are arising on a day-to-day basis.
okay. So Pallavi, would you want to conclude that, because we have a 10-minute concluding remarks
Yes,
from
sir.
Sachin
Yes,
as
sir.
well, and I think you can just conclude it, and I'll quickly come to the question then. Yeah.
Sure. So, Ajay sir, Rohit ji, Harpreet and Nitin, thank you so much for that fantastic deliberation. I think the fact that we have agreed to disagree, both with each other and with the tax department and the CBDT, I think has us in good stead. So thank you so much, everyone. And Mukulji, I'll leave it to you to take the questions of the audience. Thank you.
Thank you, Pallavi. I think we are mostly agreeing on most of the things that we have been discussing. Quickly, I think we'll just spend not more than 30 seconds on each question, because we already a little short on time. We would keep the answers brief, and I would try to answer a few of them myself, and I'll refer some of the questions to the speakers. And if, in case they want to deviate from my answer, they're more than welcome. So whether 194R will be retrospective or prospective, as it's effective from 1st July 2022. So it is definitely prospective and not retrospective. Complimentary room nights to various clients, business partners. I think this question is in respect of someone who's in the hotel industry. Would Harpreet, you want to take that?
It would be subjected to 194R.
Yeah. So because it's something which a benefit is coming to the is being given to the client or the business partner, so 194R should be applicable. Whether expenditure incurred by a company A towards expenses on employee of sister concern, that is company B, both companies being resident in India, invited to the annual offsite get-together of company A, attract section 194R. Rohit, quickly, you want to answer that?
I think prima facie this would apply, because there is a benefit going to the related company. And I think there is one clarification also: when the employee of another company is getting a benefit, you deduct TDS under 194R, and this will be subject to 192 in the hands of the by the associate company to the employee.
Sure. While filing the challan in NSDL, the drop down is not showing section 194. I had covered this aspect during my initial speech. Yes, it is not showing, but as we have practically been seeing that even if the challan is deposited under a different section, while filing your TDS return, it does not really matter whether, even if the challan is deposited under 194C, you can still give benefit under 194H. So there's interchangeability of section is allowed while you're filing your TDS return. So I don't think, even if the section 194R drop down is not there, you can deport the tax under some other section, and then you can, while filing your TDS return, I don't see any problem. That's what my office says. So I think we're covered with that. Next question is about, we would like to understand how waiver of loan or NP account, particularly housing loan cases, be brought into ambit of this section. I think this is something which is subjective. Ajay ji, you want to answer that?
So you're on mute. Ajay sir, you're on mute.
I'm sorry. So a housing loan which I have taken, and that is treated as income. Now, housing loan, I don't have a business relationship with the housing company from whom I've taken the loan. So on that touchstone, I would say I would not be taxable.
I would in fact like to add something to this, because if I go to, again, back to my original, what the finance minister had mentioned while she had introduced this section in the budget, it was on more to do with agents, and so of course that agency relationship is not coming when the loans are being dispersed by the lender to the borrower. That is one thing. And secondly, one could argue that this question number 3, wherein we have some reference to waivers of loan and all, they're just trying to explain that even something in the form of capital asset can be income, right? They may not want to be saying that we want to tax these particular transactions also. They're just trying to say that yes, capital assets, capital receipts are also taxable in some cases. So probably they're just trying to make a point, and the idea is not actually to target waiver of loans. So that could be one way of looking at things.
Yes,
but
yes,
but
yes.
we could-
Mukul, that's I think that's the correct way. But then let's not forget that when they say that even cash is a benefit, that's when this comes in. This is the cash is a benefit is to overcome the judgment in the case of Mahindra. And that's when they're trying to attack loans. So let's say if I have a business relationship, there is somebody who I interact with on a regular basis, he gives me a loan, and that loan is written back. The business relationship is there. It is during that course. So what I'm saying is it's not free from doubt. Obviously, they will try to take it to their advantage. And this is one aspect which needs clarification, because as Harpreet also said, 41(1), look at that. And then also, don't forget that the law of the Supreme Court, that if a loan has been taken in order to acquire a fixed asset, it acquires a capital nature. If it's for a working capital and you write it back, it's income. But if it is towards that, it's a capital receipt. It's not amenable to tax at all. But then again, the question number one, they come down to and to say that regardless of all that, so that it's not free from doubt. That's what I'm going to say.
Sure. I think doubt is there. I think,
Mukul, I think capital asset, when they are saying capital asset is also taxable, that is in a different context. So, for example, if you are making a sale of a consumer item, and along with that you give a car as as benefit,
as an incentive, yeah.
That is in that context when they are saying that even if it is a capital asset which is being given as a benefit or perquisite, it is taxable. Not in the context of write-off or write-back of loan.
I think so. I think we need to we can give a benefit of doubt in that direction, but I think we need more clarification from the CBDT that waiver of loan is something which is actually raising a lot of eyebrows. And Harpreet had very correctly mentioned that one, you are already not able to recover your loan, and at the second instance you have to pay TDs on that. So that's quite absurd. So I think we can.
प्रॉब्लम का कारण यही है मुकुल कि वो कैश को इंक्लूड करे एज बेनिफिट, वहीं से प्रॉब्लम आ रही है.
Correct. I think we'll definitely ask for a clarification on this particular aspect. Next question is, in hospitality industry, whether complimentary room nights to business partners such as agents, bookers, employees would be taxable as perquisite. I think as a benefit is being rendered, I'm sure it will come under the ambit of 194R.
No, but this is complementary in the course of they are giving, it is like 1+1 product. Are they not saying that this is the hospitality industry, they are giving one more night? So some person books a 2 nights, he gets one more night. So that is 3 nights for a price of 2.
No. What they're mentioning is, in the industry, they're giving complimentary rooms. I assume that this particular querist is in the hotel industry.
Right.
And it is giving complimentary room nights to its business partners, like agents. Like they're calling them, they say, okay, you because you've done, just to oblige people, they're giving them free nights, right? So it's definitely in the nature of a benefit which will be covered under 194R.
So not only that, they also, in hospitality, what they also do is that, like in consumer or auto, when you reach a target, you get an incentive of a trip. So in hospitality, it's very routine for them to say that if you're a travel agent and you have booked X number of rooms in our hotel through the course of the year, you will get 3 nights free, or you will get this package free, or you can use these many nights, etc. So a lot of their agents who generate business for them, it's a sales promotion activity. Or if a new hotel is launched, how will the person sell it? They say, okay, come and stay for 2 days and then you can sell the services, etc. So it's a trade practice.
But tell me, just one little thing. Let's say, Rohit, you have a hotel and you say, all right, whoever answers this query will get a free night. And Rohit, the brightest of us all, he answers that query. He's not related to the hotel and he comes and has a free night. अब उस पे tax थोड़ा कटेगा. Rohit का कोई relationship नहीं है. He's not into this business. You're not having any enduring relationship with him. He's not rendering any service to you. तो बैठे दिमाग है इसका करके ले गए. I think that distinction also needs to be borne in mind.
Yes, sir.
एजेंट भी अगर आपका है और आपका उससे कोई पहले कोई रिलेशनशिप नहीं है, उसने कभी आज तक आपको सर्विस नहीं दी है और उसको आप वैसे ही एक बारी में दे देते हो, तो वो नहीं होगा. This is my view. My view is because the word is arisen from business. Don't forget the word arisen.
I think Ajay ji is absolutely right. The benefit should arise in the course of the exercise of business and profession. So, for example, if I am, you have to see in the capacity as a dealer and not as a a general customer.
See, but see, coming back to the query says loyalty rewards given to bookers agents for providing booking. So that means they're already in a relationship, right?
They're already in a relationship.
Yeah. So loyalty reward points redeemed by guests for availing free room nights or discounted dinner. So I think this is also again on the similar lines. You already have a relationship with the guest and you're giving a benefit to the guest who is your client and who's your customer. So any benefit, but this says guest, right?
So this is that 1+1 free wala, that you're already having dinner, you'll get like a discount.
Yeah.
So इसमें वो कैसे आएगा? Arising from exercise of business or profession by such resident.
So
that means जिसको आप पैसे दे रहे हो या benefit दे रहे हो, it must be from exercise of business or profession by such resident. So it must be that resident which is exercising the business or profession. जिसको आप benefit दे रहे हो.
Right.
I think उसमें सब निकलेगा ये सारा बात.
I think in this particular case, the benefit is being given to a guest, not your business associate or a dealer or a commission agent. So
वो निकल जाएगा.
I think we can exclude this. Yes.
Yes.
Gifts. Now this is Mr. Ajay's favorite topic: gifts to business professionals on festive occasions, completion of projects, object targets. Of course, completion of project target definitely is a benefit. It's because it's a part of the business contract with the professional. Gifts to business professionals on festive occasions. Of course, we'll be talking about without any.
No problem. I'm looking at Nitin waiting for a nice Panasonic inverter-free AC. Mine isn't working, so gift aa jayega. You can't ask for a gift.
Nitin has already clarified that the threshold limit is 20,000, so don't expect anything beyond that.
So sorry. 50. So 56 mein aa raha hai, 20 mein nahi aa raha hai. He's not worried about 20. He's coming with 60. Was 56. I have asked. Get me a smaller one, no problem.
Thank you for being so gracious. Okay, so now gifts to business professionals on festive occasions. I think it is highly debatable because you already have a relationship with the business, and definitely you are giving that gift with the understanding that you will get better services from him in the future. Of course, open to a lot of interpretations, but yes, I think I'll be like to it. This is something which probably needs and we don't want our clients not to give us gifts in the future. So I think let's skip this question for the time being. Benefits to independent directors like air tickets, stay at hotel with spouse or without spouse for non-business purposes. I think Rohitji, would you already like to comment on this?
No, I think this will get covered. 194R will apply. There is a specific clarification also on this. The directors are into the vocation. I don't think one can say that 194R won't apply.
Right. So next is, any idea if the circular has been placed before the Parliament for approval? I don't think the circular needs any Parliament approval. In hospitality industry, whether non-chargeable kitchen order ticket to guest would be taxable under section 194R. Again, a guest is not, there's no business relationship with the guest per se. Like he's not in the capacity of an agent. He's so this, in my opinion, would not be covered. Loyalty reward points redeemed by guests for availing free room nights or discounted dinner. Harpreet, we want to comment on that?
I think 194R may not apply there, because this loyalty points is not linked to my business direct activity. It would be an indirect benefit which would have accrued by a passage of time. So here, I think 194R should not apply.
Okay. So I think some of the questions are repetitive.
Mukulji, one thing which I wanted to point out, I think there was that question on whether the circular has been laid before Parliament. I think that's an important question. Because it has to be laid. It is not a CBDT circular. It is a guideline. And unlike a normal circular under 119, which is only binding on the revenue, these guidelines are also binding on the taxpayers, because they have to be laid before Parliament. They're approved by the Parliament. Of course, not specifically approved, but the Parliament can make amends to it. And if the parliament make amends to this, these guidelines get changed. So therefore, unlike the other normal circulars, this will be binding on us also. This is a guideline under 194R. This is not a CBDT circular.
It is a circular, but it would require approval from the parliament.
No, it says it's a guideline. I won't call it a circular, honestly.
Okay. No, but it says circular. It says circular 12/2002, right? So it would be.
It says these are guidelines issued under 194R2, and therefore this will have to be laid before Parliament.
It has to be. It has to be laid before the
and will be binding on us. Let's look at 194R3 very carefully. It is not just binding on the taxpayer.
Correct.
Yes.
Okay. TDS and commission to be paid under section 194J or 194R. I'm not able to understand this question. TDS and commission is under section 194H. So I don't see probably. So I think when there's a direct section, I don't think we should apply 194R for this. So this next question is more like a case study. I think if we conduct sales conference abroad, then there are so many participants and expenditures are as follows. Wow, here's a total tabulation. Total participants are 50 dealers, 10 employee. Total expense cost 1 crore. Flight 5 lakhs. Taxi 1 lakh. Okay. Out of these expenditures, which should be included under 194R. Further from our understanding, expenditure towards probably banquet.
Mukul, isko saath mein le lo. Send this query to me and send his address also. So I'll start a professional relationship with
No. See, 1 second, Ajay. He's talking about 50 dealers, 10 employees. So he's not taking any professionals abroad. So I'm sorry, you have missed the bus. He's not taking you with them. That is that I think he is smart enough to mention that in the question. But I think he does not mention. I would assume that the conference is purely for business purposes and to educate the client about the business of the SSC and about the products or whatever. So I don't think that it's a non.
You have given him the answer. So he will term it as a conference for education. So
yes. So I think that's very well covered in the circular as well. Whether one-time settlement OT is done at bank, I think we need more clarity from the CBDT on this issue. If bad debts are written off, same I think needs more clarity. If sample is provided B2B but are of no utility to consumer, that is they cannot be sold, will it be a benefit? Rohitji, would you want to comment on this?
So this again is a highly controversial issue. So for example, samples given for display, or for example, in case of vehicles, test drive vehicles, it will all depend, but we understand from some of, the actual practice, what happens is the test drive cars are initially provided only for the purpose of test drive to the customers and ultimately, may be retained by the dealer. So in a case where it is ultimately to be retained by the dealer, to the extent of the depreciated value at that point of time when he retains it, probably 194R may get triggered. But in case it comes back, may not get triggered. And simply if it is only for the purpose of delay for no other use, probably 194R would not trigger because that is only for the purpose of display. But it will all depend upon facts. It's a highly controversial issue.
Okay. 194 applicable on when company gives laptop to consult for working. Of course, we've covered this. Whether if it is returnable, of course, it is not a benefit. If it is not returnable, then definitely it would be a benefit. What is your view on applicability of 194R on distributing brand reminders such as bag, mug, diary, pen, etc. with the company brand on it to the dealer distributor in external conference? So I think this could be something which is luxury, non-luxury aspect. We would have a luxury, non-luxury aspect to it. So it's not actually a benefit which is going to anybody. So I think, in my opinion, it would still not be a benefit and not covered under 194R, but I'm sure it could be debatable as well. Whether TDS to be deducted on reimbursement of expenses such as toll charges, diesel, traffic management charges to transporter, reimbursement of business expense to commission agent, legal expense reimbursement to lawyer. Ajay ji, would you like to comment on this?
यार वो कह तो रहे हैं जैसे कि अगर बिल डायरेक्टली कर लोगे उसी कंपनी के नाम पे तो नहीं होगा. Otherwise, any form of reimbursement that you say you claim you've spent, you may have the invoices in your name, and which you are claiming as a reimbursement, they say, "वो नहीं होगा, आप ये तो कोई," I mean, rightly said, what is the difference? And the worst part is, they say if the bill is invoices in the name of the company, then it is deemed to be wholly and exclusively spent for the purpose of business. Only then, if it is in your name. Otherwise, it is not. So as it stands, I think we have this problem.
I think this is one. This reimbursement expenses part is something on which we need a very good representation, because they've considered reimbursement in 3 different ways. And they're giving different opinions or different taxability under 194R on that. So I think this is absolutely not making sense.
Mukul, this has to be on 2 points. A, how can reimbursement be a benefit? It's not a benefit to you.
Of course.
It's a benefit to the company. When I go there for arguing a matter and I'm in a hotel, how is it a benefit to me?
Right.
I have to sustain myself. I have to live. I'm arguing for you. It's only an extension of the service that I'm providing to you. So it's not a benefit per se. एक तो वो है, दूसरा वही वाली बात की इनकम है कि नहीं है. तो ये जो इन्होंने legislate किया हुआ है खुद, those are the issues which they have to sort of withdraw from.
I agree. Even this William Shaubey High Court judgment, it says that reimbursement is not income. So therefore, TDS is not applicable on that. So I'm sure we need some more clarity on this reimbursement aspect. What will be the treatment of free samples given to end consumers which are passed on from distributor to end customer? So I think we've all this part free samples. I think they have really covered well. And of course, when the free samples are passed on from distributor to end customers,
so if it goes to the end customer, probably it may not get covered, because then it is not arising in the course of business or profession to the end customer.
But you are giving it to the dealer. Who is distributor? Who in turn giving it?
It goes to the customer. That's the question, I think.
That's the question. But Rohitji, it will go through the distributor.
Go through the distributor.
Your company, let's say Panasonic, they'll give it to their distributor with, let's say, freebie inside or.
अब मैं कहाँ से पता करूँगा? It's not my obligation also to find out customer को क्या है. He'll have to give me a list.
They are in retail, so they'll have
tax तो काटना पड़ेगा.
thousands. तो distributor का tax कट जाएगा, sir. इसमें my view is.
That's the problem, right?
Tax तो हमेशा distributor का ही कटेगा, but yes, I think this would get covered. Whether TDS to be deducted on reimbursement of conveyance to off-role employee, I think this is very well covered. What is the treatment target-based incentive in the form of credit notes? That is 2% payout is given if you achieve certain sales target. So incentives and discounts and rebates have already been covered, that they will not be part of 194R for convenience of operation of the section. So this will not be covered under 194R. If TDS is already deducted under any other section, 194C or 194J on an amount including reimbursements, then whether the proportion of reimbursement of benefit would now fall under 194R. I think this is again quite subjective, but I think covered. Has the circular been laid? Issued been laid before? I think we've already covered this. Whether TDS relative on small value item like stationery items, T-shirt with logo and other brand promotional given to retailer. I think this we had covered earlier. On achieving sales target, a gold chain is given to distributor. Of course, it is covered under section 194R. What will happen in case where a car held by the company in its books of accounts is being used by the director for office commute purpose, where it will be difficult to bifurcate personal use and official use? I think this is a car used by the director. So if you see the director, then
so दोनों में ऐसा मुकुल, अगर डायरेक्टर एम्प्लॉई है तो परक्विजिट में आ जाएगा.
Right.
अगर डायरेक्टर वैसे है तो फिर उसमें आ जाएगा एलोकेशन, जैसे रोहित कह रहे हैं. और इसका बेस्ट तरीका ये है कि जैसे आपने पर किलोमीटर का रखा हुआ है कि मैं 10 रुपए पर किलोमीटर चार्ज करता हूँ या 2 रुपए पर किलोमीटर चार्ज करता हूँ, जो भी रूल्स है, that will be the value.
Right. So I think we have covered most of the questions, and although they've, I think we are running totally out of time, and
Sachit has a flight to catch, Mukulji. So
yeah. So what we do is that.
And the bouquet and the memento was only till 5:30. Yeah, already we are 6:15. We have 45 minutes. Probably we are trying to send 2 now.
Sir, I will from the PhD side send you a perquisite. Less than 20,000.
So thank you everyone, and over to Sachin
Very
for
well
his
done. Very well done.
remarks and
I
the word
must
of thanks.
compliment you all for this. Excellent. Very well done.
Thank you so much, Mukulji. I'll start with our patriarch, Shri Ajay Wadhwa, for his extremely lucid, discussion today on 194R. Whenever I hear him, I'm amazed at the clarity with which he speaks and the language and choice of words. Something which I always look up to you, Rohit ji. Somebody whom I have worked with for many years. One question I had, sir, was, we've been beneficiaries of those lovely offsites at Vash Associates. Will those now get covered under 194R or not?
They are all educational.
That is the most educating thing I've heard today. Thank you for your lucid comments today, sir. Nitin, thank you for providing the industry perspective. And my friends Harpreet and Pallavi, thank you so much for giving out such lovely perspectives on what, as Ajay ji prescribed, a five sentence section, but capable of probably maintaining a few households in lawyers for the next many years to come. Thank you so much for your comments. I will leave Mukulji, of course, our chair of the committee and under whose guidance we've been working on this, the PhD management, for allowing this opportunity, and to our lovely audience who've stayed till about 6:16 now with us. Thank you all for being there. I will leave everybody with a thought, and which stemmed from what Ajay ji said at the start, that the purpose of TDS was to collect tax. This was like a wartime measure, pay as you earn. The perspective of TDS is today changing. It is more used as a reporting tool, whether it's a TCS on LRS or a TDS on your withdrawals from your own bank account, which is completely preposterous, or a TDS on e-commerce operators today. I mean, all these are examples of where TDS is now, or TCS is now used for reporting or capturing transactions which were earlier not subject to tax. My only two piece to the government.
PhD CCI, PhD CCI, GSD CCI, PhD CCI.
Sharma ji, can you please mute yourself, please?
Sorry.
My only two piece of advice to the government would be that even if a reporting requirement is to be introduced in terms of imposing a TDS, the rate may not be as high as 10%. You could do it with a 0.5% or a 1%, because a 10% TDS on such transactions could even lead to a hardship of cash flows to a lot of professionals and taxpayers concerned. So if the ultimate aim is to achieve a reporting requirement, a 0.5% TDS is enough. I think those are my thoughts on that. And I think last word has not been said. We'll see it in court, whether in the form of a challenge to the provision or in the form of interpretation. I think good times ahead for lawyers and accountants.
Thank you, Sachin. Thank you, everyone. Thank you.
Thank you for joining us. Thank you so much.
Thank you.
Thank you, Chairman Sahab and our co-chairs. And we are extremely thankful to you for sparing your valuable time. And our esteemed panelists, we are thankful to you for sparing your valuable time. And we look forward to organize more discussions on the subject related to direct taxes in the coming times. Thank you very much.
And special thanks to Dr. Sharma and his team, Mr. Mishra.
All your guidance, all the guidance of chair and
for doing a
co-chair.
good job, and we'll have more programs shortly. Thank you so much.
Thank you. Thank you very much.
Namaskar.